It's perhaps not very popular to say this, but the truth is we don't need central banks.
Yeah.
The central banks came about originally in every country as a cartel of the big banks.
If the government just preserved life, liberty, property, and then you didn't have the legal monopoly for the central bank, that you would actually maximize the number of small local banks and the decentralization of it all. Isn't that the case?
That's my main criticism, They do it in secret because they don't want this power that they have, and they have used actually for many bad things, like to create a recession on purpose, to prolong a recession, or to crush a banking system, to cause concentration of the banking system, to create an asset bubble, to redistribute wealth from the many to the few.
What about sound money? Like, what is the role of sound money in rectifying a lot of these problems?
The European Union is modeled on the Soviet Union. The Soviet Union claimed to be a democracy. Why? Well, it had a parliament. But the parliament had no power to actually come up with laws. Well, that's exactly the setup they chose for the European Union.
At a particular time and place, that individual is going to have more knowledge about his craft, his customers, than any centralized institution ever could.
That is doomed to failure right from the start. It's impossible.
So we were talking about the tally sticks last time, and you brought a couple to show us.
Indeed, yes. So here it is. This is an example of those tally sticks. It's made from hazel wood, which is cheap. It's like a bush of hazel, is everywhere. It needs to be thick enough so you can carve this into. And then you do these notches, and the notches, they follow a formula.
It's like a key almost.
You've got the front and the back. On the back, if you've got these very big notches, that is 1,000 pounds. So there's two of them means 2,000 pounds, like broader than your thumb. And 2,000 pounds, that is a lot of money. So, in modern terms, it's probably almost, 1,000 pounds, almost $1 million. In modern money, basically a lot of money. And then, so this is 2,000 pounds. This is hundreds, which is your thumb size. So 2,100, and then we've got 23. This gets, each time it gets smaller, and then you've got the shillings. 4 shillings and 5 pennies. They get very fine. So they get narrower, and then each time it's a decimal. Well, it's not entirely decimal because you've got shillings and pennies. It's the old way of cutting up a pound of silver into 20 shillings, which actually also comes from Germany, from the Emperor Karl the Great, or Charlemagne in French. And the in Britain this has lasted until this day, using the pound. Well, many countries use the pound. Lira means pound, in Italy, although, that's disappeared. We've got the euro now.
Even dollar meant a unit of weight too, because this is back when these were actual weights of money.
The dollar is a bit different. It refers to a valley. And the valley was, again, in the German language area. This is actually where my mother comes from. It was for a long time part of the Austrian-Hungarian Empire. It's a German settled area. Basically, Saxons settled there, and then it became part of Austria in Bohemia. There was a big silver mine, and the name of the town was after the valley, Joachim's Tal. Tal means valley, so it was Joachim's Valley, Joachim's Tal, at the biggest silver mine of the Austrian Empire. And they coined their silver coins there. And they were of such good quality and high standard and very consistent that they became quite dominant. It's basically, it was very reliable money. Everyone liked it. And as a name, they referred to them coming from Joachim's Tal as Thaler, from the valley, Thaler. And in the local language, you pronounce that. My mom, she still speaks the local language. You say dollar for thaler, dollar. Now, what's this Austrian coin got to do with the US? Well, because the Austrian Empire included Spain through marriage. So the kings of Spain were Habsburg. And Spain, of course, had an outpost in Mexico, which originally was very large, including what today is Texas and other places. So, and there they had the Austrian coin because it's the same empire, the Habsburg Empire, where the sun didn't set, is what they said. And because the United States initially didn't have its own money, this is how commerce takes place. The Austrian silver coin, the thaler, the dollar, became the U.S. Became used in the U.S. and then that name was used for U.S. money later. So that's the history of the U.S. dollar.
Interesting. Yeah. So
and so the tally sticks, of course, was a Norman. Well, we probably can't say invention because these go back to even earlier historical roots. These tally sticks have been used in ancient societies in quite a few. We have records for ancient Greece and also even China, ancient China, using sticks with notches. But this specific system, and we talked about this, the exchequer, and its very elaborate system with the chessboard, abacus, calculations, and then you take the notes, the counter roll, the contre roll, where control comes from, control, and writing a check from the chessboard, and the tally stick being split into the stock and the foil, and if they match, because the grainage is very unique here.
Can you show the matching there?
Yes. So basically, wood is like a fingerprint. It's quite unique, and you split it apart.
Right.
You rip it apart, and then because only the original ones will fit together.
Right.
When the stock fits the foil, it tallies, and if it doesn't, you've been foiled because the foil doesn't fit. That's what was kept in the royal treasury. Now the Normans brought the system to England, but of course they did quite a few other things as well. And who were the Normans? They were originally Vikings who'd settled in this part of France, and they brought the world something else that's been extremely impactful, and that's the English language. And how did that happen? Well, first of all, they lost their old language. That's how the process started. Because the Normans, they were Vikings, and they did their Viking raids, and that's quite well known. Sort of from the 8th century onwards, 8th, 9th, 10th century was sort of the peak of the Vikings. And the Vikings, came from Scandinavia. So we're talking about Norway, Sweden, Denmark. They did some great feats, These were heroic men, and these are real men. They were fighters, they were warriors. They had huge, heavy swords, sword fight was very important. It was a very democratic society. This is very basically ancient Germanic society, because the Germans are just descendants of these Scandinavians, probably, of course, much more diluted when, they move further south, there's other people mixing in. But originally that's the same, it's clearly the same origin. So this is the Germanic history is one of democracy. They always elected their ruler, their kings were always chosen. And it would most of the time be, the one who is known to be a good fighter, a strong fighter, and a good leader. And usually also, a kind of honest leader, you can trust. And so, of course, the test was, there was an election. They always elected. And later that was kept up in the Holy Roman Empire of German nation, because the kings would elect their emperor in there. Now, the Vikings, had all these feats. They, for example, went to Iceland, and they went all the way to America. It was around that time when the Vikings spread out and went on their raids and exploring, the world. They also came over. They called this part of Newfoundland. They called it Vinland, because apparently at the time wine grew there, and they discovered wine, wild,
And where was it that they discovered this?
Newfoundland.
Oh, so
they settled. Well, we have the historical records, archaeological records, but also the written records. They wrote about their experience. There was a settlement. It didn't last very long. And we know, of course, this era was one of a very warm climate. Which is another interesting topic, climate change. But once you realize that at that time, they settled in Iceland, and they also were in Greenland. They called it Greenland because it was green, because it was much warmer. It was an era of Europe enjoying, and also this Western Hemisphere, Northern Hemisphere enjoying fairly warm weather. It was getting warmer, which is good for vegetation, and I suppose CO2 levels were high because they're positively correlated with the weather, but there's a lag. It's first the temperatures that rise, and then CO2 follows.
Because of the plants expanding their footprint?
Well, there's also processes going on, but, and there's different theories about the mechanism, but we just know the facts, and we've got a long record going back,
right?
Which already, talking about climate change, it tells you CO2 going up doesn't mean temperatures will go up. It's actually the other way. It's like with interest rates and economic growth. They try to sell you the opposite sort of causation.
Wet streets cause rain kind of thing.
Yeah. With interest rates, what we're being told is lower rates lead to higher growth, higher rates lead to lower growth. Central bankers tell us every day, that's why we're raising rates. We want to slow down this economy or, cool down the markets and so on. Well, what's the empirical evidence? I'd also done the first empirical test of this because it's a taboo topic. Nobody actually published a proper, careful empirical test of what is the link between interest rates and economic growth. And in many ways, nobody thought it's necessary because we all know what it is. They're telling us every day. The central bankers, the financial journalists, the textbooks, the economists, they're all saying lower rates lead to higher growth, higher rates lead to lower growth. And interestingly, we've got all these schools of thought in economics, right? But that's where they all agree. Whether you're a classical economist, a neoclassical economist, a Keynesian economist, a monetarist economist, a post-Keynesian economist or Austrian economist, they all agree on this point. Lower rates lead to higher growth, higher rates lead to low growth. So in many ways, everyone thought, we know this to be true. And everyone assumed that lots of tests had been done because we all proclaim this to be true. And we believe it's true. So it must be true. And there must be lots of empirical evidence in favor of this. But once you check, you realize it's not true. I realized first when I was a student, and you go through research papers when you write up, you look into a topic. And that wasn't my research aim, but often interest rates, of course, are used as the key explanatory variable. One of the explanatory variables in models, even if the model is about something else. And I remember already then noticing, it's usually hidden in footnotes. Oh, and by the way, interest rates were not significant, or in another paper. Oh, and we noticed the sign on interest rates was the wrong way round, but, sort of, okay, let's bury that in the footnote. And I saw that again and again. So I already had my suspicion. There's something hidden here. And then when I was as chief economist working in Japan, and I already discovered the key driving force of the economy is actually the quantity of credit. But what about interest rates? Isn't that supposed to be the key driving force? So then once you do the empirical tests, you realize, and so I did this study, there's 2 papers now published in peer-reviewed journals. They're both open source, so you can easily get it. One is called Reconsidering Monetary Policy, published in the quite high-ranking journal Ecological Economics. I managed to place it there because all the other journals, it's like, we can't touch this. We can't publish this. No way. This is like contradicting everything we've ever said. So I did this test. The first one was 4 major economies, US, Japan, UK, and Germany for half a century. you want to have a long time period because there's business cycles. There's also things happening. You need a long time period, quarterly data. So that's significant. And you compare nominal GDP growth and interest rates. And we looked at 2 interest rates, short rates, 3 months interest rates, and then long rates, 10-year government bond yields. And the conclusion was, and it's a very clear-cut conclusion, interest rates, first of all, about correlation. It's supposed to be negatively correlated, right? Low rates, high growth, high rates, low growth. So negative correlation negative sign between interest rates and growth. That's not true. Yeah. We found consistently over this half century in all the countries, a very strong, overwhelming result that the correlation is essentially always positive. Now, you could say, well, hang on, when you do correlation, isn't there a problem with leads and lags? And how do we do this? Well, first of all, you have to test whether you have a constant correlation, actually, with a constant lead or lag time, or whether it varies over time. And we found that this lead and lag time between interest rates and growth always varies. So then we use a dynamic model, and essentially we let the data tell us what is the optimal lead time. So this was a DCC Garch model, which is the state of the art. This is the best way you can do it, where you let the data tell you. And the result was interest rates and growth are positively correlated always. So it's not true to say that, lower rates means, we now experience higher growth. It's not true. There's no empirical evidence. And what about the causation? Which one causes which? And the closest we can come to this is the statistical test called Granger causality, where, famously correlation is not causation, but you can test which variable, which time series is better in forecasting the other. And you can do it both way around. And then that's what we did. And the conclusion was, well, interest rates cannot well forecast economic growth. It doesn't work very well. But economic growth forecasts very well interest rates. Right. So the statistical causation, Granger causality, is from growth to interest rates, which means the finding is totally in two dimensions, the opposite of what they tell us in the textbooks.
Right.
Instead of low rates lead to high growth, we observe high growth leads to high rates. Yes. Low growth leads to low rates. So interest rates follow growth positively, and therefore they're not useful as a monetary policy tool. And of course, that was no surprise to me anymore.
Policy making that is following market dynamics, not the reverse, right?
Exactly.
Which is obvious when you really stop and consider that policymakers cannot govern markets clearly.
I mean, of course, they always try to manipulate markets, but when you look at quarterly data in the long run, it's very clear. It's very clear. The other paper was higher frequency, monthly data, and even there we came to the same conclusion. I mean, there's a bit of variation. We also had more countries, almost 20 countries now. So there's a bit of a variation, but the ultimate conclusion is the same.
So this means that central banking, the purpose of central banking, at least the ostensible purpose of central banking, is actually impotent, right? That they're following market dynamics. They're not inducing these market dynamics.
Well, you see, interest rates are the smokescreen. This is to divert everyone's attention. It's the alibi. For example, look at the Bank of Japan. So from the early 90s, from 1991, it wanted to give the impression, we are supporting the Japanese economy. We want growth and strength of the economy and recovery and all that. So look at our rates. We're lowering rates. It's a great alibi. The central bank is really working hard. Like these guys, they were sweating in their meeting. They were meeting for 2 hours and 3 hours, and they concluded to lower interest rates by 0.25%. Wow, these are brilliant, amazing people.
Seriously, that's seriously crazy. So crazy.
It's crazy, of course. And sometimes, they meet for 2 days in a row, and they have big debates, and the conclusion is they're not going to change interest rates. They stay at 0.75% or whatever.
This reminds me of like when ancient priests used to look at like the entrails of animals to decide. It's just totally arbitrary nonsense ritual.
I mean, if you step back and think about it, can it really be true that these tiny, tiny changes in these rates have this huge impact? And actually, if you do the proper test, the answer is no, because actually they always end up just following the markets.
Exactly.
And when they lean against the markets, it just usually doesn't work out. Yeah. They always end up still following the markets.
Don't they also get this ability to sort of take credit for when things are good?
Exactly.
Right?
Exactly. That's, of course, part of their narrative. You'll notice that whenever there's something good happening, growth, recovery, it was our wise central bank policy. There's a recession, there's a downturn, there's unemployment, there's bankruptcies. it was the government's fiscal policy. It was this structural problem. It was external shocks. It's foreign events.
Capitalists.
Everyone else is responsible. Central bank. Oh, no. Yeah. We've been doing brilliant policy.
Yes, everything.
So it makes you very suspicious. But of course, the real story is, so interest rates are made out to be this policy tool so that you give everyone something to look at, because it's obvious to anyone that the central banks are powerful players. So you want to watch them. But how do you watch them? Oh, you waste your time following interest rate policies. Of course, it's true still that for one market, interest rates are important. That's the housing market. Because of the usual calculations with mortgages and because ultimately it will also affect then credit availability, because the question is, if interest rates aren't such a big policy variable, what is really driving growth? And we talked about that previously. What I found empirically and reconfirmed in further tests on many countries is what's driving the economy is a leading variable with lead time for proper forecasting, and is also causing it. You can again test the Granger causality, is the quantity of credit creation. Bank credit creation is driving it. Of course, you have to be more sophisticated. It's that bank credit creation that is used for the real economy, for GDP transactions. Right. And that explains GDP growth. If bank credit, that part of the bank credit that's used for asset purchases, that explains asset markets, which is also useful to forecast. And when you look at the bank credit for the real economy, you can still subdivide into credit for business investment and credit for consumption, which will be more closely aligned with inflation, and therefore just nominal growth, whereas the investment is more real growth. So that's really what's driving the economy. And the central bankers don't want people to realize this. They want them to just follow their spiel with interest rates so that nobody's really holding them to account, because the fact remains, having said that, interest rates, is not the tool that is made out to be. Certainly it doesn't work the way they claim. It's still true that central banks have enormous power because of what? Because of their power over the banking system. The real force is the main creator of the money supply. That's the banks. They create normally 97% of the money supply. But what shapes their decisions is the central bank. But it may be other stuff. And it's not just straight, rates are being raised, rates are being lowered. No, it works differently. But because the banks are being regulated, that's the most heavily regulated industry. And the central bank is the most powerful institution to influence what banks are doing. The mechanism is different. It's not just straight, the rates lower and higher.
There's also the implicit guarantee for future bailouts, right, that are influencing commercial banking decisions. If they think or can assume that they'll get bailed out in bad economic times, they're more likely to take larger risks.
So we have the incentive structure, exactly. We have other things. We have the profit margins that the banks can have, and that has an influence. But the straightest form, and that is still the single most important impact on bank behavior, is the regulation. And there's ways in which central banks can regulate the banks that will encourage lending, even for particular sectors, or discourage lending and therefore credit creation. That can take a very direct form. Like in the high growth economies, they didn't want to waste time with all this propaganda and fuffing about. They just had credit growth quotas that were calculated for the economy. If we want 10% growth, we have 10% aggregate credit for the real economy growth. We split it up into by proportion of bank size, this bank this much, that bank that much. And the banks are told for the next quarter, that's your quota. You can use it or not. If you don't use it, we'll cut the quota next time. So you better, if you want to compete against the other banks, always use up your quota. And this is how it works.
That's clearly not capitalism.
That's window guidance, credit guidance. It works extremely well. And you see, the reality is, of course, every country has a lot of government intervention. Now, if you ask me, I would say most of it we should scrap, because we should have as much of a free economy as possible. But if you must have some intervention, for example, to avoid some bad things happening or to achieve a particularly important outcome that you really want to achieve, and that's ambitious, then this is the one form of government intervention that actually helps, and that is in the credit market by making sure the banks direct their credit in the right direction, the right broad areas. You don't want to do micro picking winners, but the sector of the economy, housing market versus lending to small firms. That's very important, and that's where the central bank should actually intervene. And then you could just scrap all the other rules, including actually bank regulations, which are the banks are too over-regulated, and it's the wrong stuff, which doesn't prevent banking crises. But if you make sure that banks only lend for productive business investment, you get growth without banking crises. And surely that's a desirable goal.
The farm at Okefenokee is a revolutionary new regenerative agricultural community. It features an 8,000 tree olive orchard, which they use to make their own olive oil, as well as a very large pecan orchard. All the animals on the farm are heritage animals, with some varieties over 100 years old and others thousands of years old. Fresh eggs are produced daily by the farm's chickens. Also, there are over 1,000 beehives that pollinate the over 200 heirloom fruits and vegetables and provide honey to all the residents. The farm makes its own molasses, unrefined sugar, herbs, and spices. The farm also features an herbal apothecary and a commercial kitchen. These are just a few reasons why the farm is the healthiest place on earth. To learn more about the healthiest place on earth, go to okefarm.com and use discount code BREEDLOVE for $21,000 off custom cabin pricing. Again, to learn more about the farm at Okefenokee, go to okefarm.com and be sure to tell them I sent you. iCoin Technology has released a slick new hardware wallet. It looks like a mini iPhone with a high-res 3-inch touchscreen and camera on it. The device has no Wi-Fi, no cellular connection, and no GPS. It is an air-gapped hardware wallet which uses QR codes and a camera to communicate with the Bitcoin network. It has a built-in camera which is required for air-gap operation, and it has an optional Bluetooth compatibility. It's really a brand new user interface and user experience for a Bitcoin hardware wallet. iCoin makes self-custody accessible, easy to use, and non-intimidating. It even comes with an optional custom iCoin thermal printer, so you can print out the private key and its associated QR code when you're setting up the wallet. This makes setup quick and simple. Also, it is easy to restore the wallet just by reading the seed phrase QR code with the wallet camera. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like the iCoin wallet to truly own your Bitcoin. So go to iCointechnology.com/breedlove today for 30% off the purchase of this sleek new hardware wallet. Again, that's iCointechnology.com/breedlove. Can we talk about the entire idea of centrally planning the interest rate as just another form of price fixing? Like, so you said you advocate for decentralization. So would you advocate then for free market interest rate price discovery as well?
I think the truth is, it's perhaps not very popular to say this, but the truth is we don't need central banks.
Yeah.
The central banks came about originally in every country as a cartel of the big banks. Mm-hmm. And if that cartel had been used, and sometimes it is used, rarely, but sometimes it is used for the common good, then actually, you can make it work. But it's really still not needed. It has the advantage for the banks that there's always an institution to bail them out. But if you set the right policies and the right incentives in the first place, you won't get into a situation where you need a bailout, right? And that's surely more desirable. But it's a fact that credit guidance, compared to any other intervention, is still highly effective and achieves the result. But who should do it, and should it be in secret? And that's my main criticism. They do it in secret because they don't want this power that they have, and they have used. And they have used actually for many bad things, like to create a recession on purpose, to prolong a recession, or to crush a banking system, to cause concentration of the banking system, to create an asset bubble, to redistribute wealth from the many to the few. They've done all that, but in secrecy. Whereas if you make it open, transparent, they can't get away with this stuff. And that's why it's always being kept secret.
Isn't that a slippery slope too? And I mean, I hear you that of all the intervention techniques, this is probably the most effective.
Yeah.
Because you're intervening with the most important price in the world.
Exactly.
Right. So that makes sense. That you get a lot of leverage on a small
in many ways, it's part of managing the public good that is money.
That's what I want to ask about. So this idea of the common, like a public good, okay, money is a public good, a common good, basically. Yeah. But this idea of manipulating money for the greater good or for the common good, that's like a sort of a different perspective on that. It can be this ephemeral thing, that demagogues can attach to and say, justify any action, basically.
Right, exactly. So that's the slippery slope. But if it's done in a simple way and in a very restrictive, very focused way and fully transparently, then it'll work, because then you're not doing these secret shenanigans they've been doing. Yeah. And so, in other words, it should be very simple rules, such as the following. Because banks are money creators, which is a public function. So you've got private sector entities that are engaged in doing something that affects the whole public. Who gets the new money? For what purpose? How much? Will reshape the economic landscape, And that's very powerful. That affects us all. So if there's only big banks and they lend to these big private equity funds and hedge funds, you get a very different outcome from when you have an economy with thousands of small local community banks lending to small firms, which are the job creators, and they let the small firms do their commercial capitalist business without further intervention. You will get high growth without asset inflation, without consumer price inflation, and without crises. And that's something where the central banks the government could show. We don't need central banks for that. Government could look after this. Yeah. For example, by having a law which says, you could scrap all bank regulation, only have this rule: banks are only allowed to create credit for transactions that contribute to national income. Sounds fair enough. And most people, when they hear this, will say, well, aren't they doing that? No, look at the UK. All right. 85% of bank credit is for asset purchases, which doesn't contribute to national income. Right. It contributes to the rip-off of the public, and wealth redistribution and asset bubbles and banking crisis. And that's why we had the repeated banking crisis in the UK. Right.
So restrict lending to only productive commercial activities. Is that right? Not just the transfer
for business
assets.
Investment. Yeah. In other words, not for asset purchases.
Right.
Consumer loans, strictly speaking, you could also ban bank credit for consumer loans. And this would also mean you get no bank credit for buying a house, an apartment, real estate, land from banks. But I'm not saying, hey, let's ban these transactions. That's ridiculous. And actually, in practice, will be very hard and won't work. So we shouldn't ban speculation, which it's hard to do, but we shouldn't even try. But let the speculators that do the financial asset transactions, let them raise their money in the markets from non-banks. They can get it from non-banks. Okay, what about families? There's a young family. They want to have children. They need some space. They need a house. They need some. They need to move out from the apartment from the small apartment to somewhere bigger. They need a mortgage. Well, let's create non-bank mortgage lenders. So they're not banks. And let's have many of them. They have to compete fiercely to offer really competitive mortgages to them. And the banks are not allowed to get into this business. Problem solved. Well, hang on. Isn't this the same thing? No, because if they're not a bank, they can't create money. Well, how are they funded? Well, they can fund themselves through issuing bonds from from these efficient capital markets we always hear about. No problem.
What about sound money? Like, what is the role of sound money in rectifying a lot of these problems that we're just, again, looking to the centralized institution to try and reform itself or, change its regulatory orientation to the market? Whereas if we just adhered to sound money, because as you said the other day, that this progression into fractional reserve and ultimately zero reserve banking was originally a violation of contract law, for instance. Like had we just upheld private property rights and contract law, we would have never gotten into this mess in the first place. So isn't sound money just a return to those basic principles?
Yes. And of course, in a modern system, what does it mean? It does mean that money creation is linked to somebody making a contribution to the economy, which is the original capitalist idea. The capitalist entrepreneur should be funded with money creation. They're the ones that deserve to be funded with money creation. But if you do something that's not actually contributing, it's just speculation, changing ownership, well, that should not be backed with money creation. So sound money means linking the money creation, the credit creation, to the creation of goods and services, introducing new technologies, increasing productivity, having a good idea that adds value, that should be backed, but not other things. Because you will find then you can have high growth and no inflation. So in other words, my take on sound money is not what some people recommend. Oh, there shouldn't be any money creation at all, because otherwise we get inflation. Well, the fact is you will get little economic growth. You're not encouraging growth, and you are actually constantly under deflationary pressure in that case. So, and that creates problems that we don't really need. So there is something magic about banks. We can use it for the good. The redeeming feature of banking is if and when you have many, many small banks that are locally accountable, and they're almost entirely funding entrepreneurs, so small businesses getting loans from them. Because that's hard work to evaluate each loan application. And if the amount is small, you've got a lot of hard work and you don't get that much absolute pay out of it. But that's the real job.
The credit assessment, the maturity matching, you're funding investment from real savings, and the banks, if they fail in that function, then they fail, right? You said locally accountable, or they have skin in the game.
And they're small, so they're not going to be bailed out.
Yeah, and that seems to be the key, is the distribution of risk, right? Like if it's actually, the risk is distributed to the individual banks such that the actions they take, they are married to the consequences, right?
Yeah,
whether reward or penalty.
Now, that switch was actually done very dramatically in China, and it explains this incredible economic growth we experienced in China, where for 40 years, 4 decades, we've had double-digit growth, close to 15%. Therefore, doubling national income every 4.5 years, again and again. That's how China developed so rapidly that essentially it's close to being number 1 economy in the world. And they did this because they switched from the Soviet system with one central bank and one bank. There was only one bank. To the decentralized system. They looked at Japan. They studied Japan. They asked the Japanese, how did you do this double-digit growth for 2 decades? And the Japanese told them, well, you need banks. And so Deng Xiaoping came to power in 1978, went to Japan, asked him, tell me the secret of high growth. And he came back and he founded banks, thousands of banks, small banks, local banks, village banks, savings banks, regional banks, provincial banks, rural credit unions. And the rest is history. Lending to small firms. The comparison is, on the one hand, you could have a centralized system where so you've got one central bank, one bank in the whole system, Soviet style. Then you maybe have a committee of 5 people deciding how much money to create and who to give it to, and the entire economy.
Right. It's like the Soviet pricing czars.
Which can't be effective. Right. And that's what Deng Xiaoping realized. What the Japanese told him. You've got one bank and China at the time maybe was 600 million people already. Well, how about you have 5,000 banks? And then if you have 5,000 banks with let's say there's 30 branches each, okay, and then you have maybe 35 loan officers in each branch dealing with small firms. Then you have more than 5 million loan officers doing this analysis. Right. And of course, they will look at per year at dozens of applications. So you're dealing with hundreds of millions of loan applications by small firms. Right. The best are selected, which are viable, make sense. They kick the tires, they go around, they check out these companies.
This is a compute problem. Distributed computing is superior to centralized
computing. Because it's decentralized and it works. Which system is better is the question, and Deng Xiaoping was faced with that. 5 guys at the central bank deciding the creation allocation of the entire money supply, or 5 million loan officers on the ground in every village, checking all these hundreds of millions of loan applications. Well, I think it's pretty obvious which system is going to be better.
Absolutely.
And Deng Xiaoping did the right decision.
So this is such an interesting point.
And then 5,000 banks were created, and the rest is history.
Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLFNYC.com. I want to ask you about this. So this is all reminding me of Hayek's essay, The Use of Knowledge in Society, where he talks about this very thing, that knowledge is specific to what he calls the man on the spot, right? Like at a particular time and place, that individual is going to have more knowledge about his craft, his customers, than any centralized institution ever could, right? Even if he could pass all that information into the centralized institution and then get the orders from on high, by the time he gets the orders, they're going to be less relevant because things change all the time. So what it sounds like this central planning paradigm it is evolving, right? It's realizing that, hey, actually information throughput's a problem when I've got 5 guys at my central bank, whereas I could have 5 million loan officers. And so central planning is then adopting the principles or strategies of free market capitalism.
Decentral planning.
Decentral planning.
Essentially, that's what they did. They dropped central planning.
Do we need to then change this dichotomy that we are accustomed to talking about, central planning versus free market capitalism?
Yes.
Like it's something more in the middle now?
Exactly. Well, it is. You see, most people think central planning is this micromanagement. Mm-hmm. That is doomed to failure right from the start. Mm-hmm. It's impossible. It doesn't work because the reality is everything is dynamic.
Yes.
And all the models they use and theories they use, you assume everything else, you change one thing, everything else stays the same. Mm-hmm. Well, that's not reality. It's not ceteris paribus, everything else being equal. Yeah. No, it's mutatis mutandis. Yes. If you change one thing, everything else will change. Yes. And that's the reality. So how do you handle that?
It's a complex system. Small changes in initial conditions have outsized consequences.
The key insight came from the founder of the first modern era European high growth economy. Mm-hmm. Which was the king of Prussia. Prussia became the core of a united modern Germany. Mm-hmm. It was so successful that they had to abolish it. It doesn't exist anymore. You won't find Prussia on the map. That's how scared people were of this highly successful system. And the first king who founded essentially the modern Prussia, Frederick the Great, is called Friedrich the Great. He and perhaps to some extent his father already, because they were at the same time military leaders. Now the military is just like a banking system or like a government bureaucracy. Basically, it's a whole bunch of humans, okay, a whole bunch of guys, and they're in some kind of organization. And the question is, how can we organize this so that everyone is highly motivated and can contribute to the best of their abilities, which is a challenge every bureaucracy faces, every human organization faces. And of course, to them, it was a matter of survival. It was the army. And that's why a lot of innovations, of course, have been done in the army. And he came up with this. He made it law, the following principle. He called it the subsidiarity principle, which is that it is best to delegate decision-making power from the top. He was the king. He could have decided everything. He could have done central planning. But he realized, he was a smart guy. He realized this doesn't make sense. Yeah. No, we have to delegate. In fact, the opposite, to the lowest possible level, as much as can be delegated. There's a limit. Certain things have to be a bit higher up the hierarchy. But as much as you can, you want to delegate to the lowest possible level. And specifically, this meant, it was made law in 1812. So, okay, that's a bit later in the story. In the Prussian law, that the officer in the field had decision-making power. And that explains this puzzle that it shocked the whole of Europe. You know, the Prussians won every war. They were outnumbered, outclassed by a factor of, 1 to 10, 1 to 20. They won the battles. How on earth is this possible? And later, First World War. You know, there's British military historians. Why was the German army so much more effective? They studied it, and it was, they were outclassed, outnumbered, and still they were, in terms of efficiency, better.
Right.
And the Second World War in Italy, where you had Germany against the American army, army historians famously studying this, and wow, the German army was totally outnumbered, and still they held up so well, you know, in terms of military efficiency, superior. Why? And the answer is what is this key insight of King Frederick of Prussia. When you delegate decision-making power to the lowest possible level, the officer in the field had the freedom to decide how to do things.
Right.
And the timing, the micro timing, and all the micro decisions. There was an overall goal, a target he had to achieve from the general. Yes, so there's a bit of top-down always. Right. It's a hierarchy, of course. But a lot was delegated to the officer in the field, and that's superior. Whereas the British Army in the First World War, the American Army in the Second World War, it was central planning. Right. They were told not just the goal, but how to do it, when to do it, every detail. Yeah. And the reality is, of course, the battlefield is constantly evolving. Yes. You can't predict it. So the central planners have no hope of getting this right. And that creates two problems. Number one, it's just not efficient because actually it's the wrong instructions you're giving. And secondly, it's the best way to totally demotivate people. And the Soviet Union is the key example of that. You know, all this micromanagement, central planning, when the instructions, the orders were complete nonsense. That's how you demotivate people. Nobody even wanted to do a thing. It was like, this doesn't make sense. Why am I being asked to do this? And so this is what happens. Whereas if you give your officer the responsibility to decide for themselves, well, it's more effective. They have the best information. Yeah. But also you totally motivate people because they can see I can make a difference. Right. What I have decision-making power. Right. So you've got motivated people. This later became part of the German, when the army people retired, they became company executives in the corporate sector. And that's why the German companies
became so successful.
In the 19th century became very successful. Yeah. And the Japanese listened. They adopted this principle in the post-war economic setup. This principle of subsidiarity. And of course, it was also implemented in Prussia already in the financial system by having many small banks, the local savings bank, Sparkassen, they started in Prussia. Whereas other countries had a much more centralized system. And so it's this principle of decentralization that is the principle of success. And actually, it's also why America has been very successful in history. Because America has had the large, there's the decentralized political structure, like also in Federal Republic of Germany, but this is all the states. But then also these thousands of banks and so many local banks. So America has been on the right track, but something went wrong with the founding of the Federal Reserve. And ever since, it's been about killing banks. Yeah. Officially, the Fed said, we're here to help banks. But of course, they only help the big banks. Yeah. In the Great Depression, what did the Fed do? The Fed was founded officially in order to be a lender of last resort, if there's a banking crisis, we don't have a central bank. We need the Fed. It can step in. Well, before the Great Depression happened, when the crisis came and the banks were in trouble, the Fed didn't bail them out at all. It watched as 10,000 small local banks went bust. And it backed the bigger banks to then buy them up. And you see, you have to remember that the depositors lost their money. There was no backup system. So all these families, all the farmers that had pioneered and worked the land and built America, they lost their lifetime savings, while the bank then is bought up. So the savings are gone, the deposits are gone. Sorry, it's a bank failure. Oh yes, this bank in the bankruptcy, in the insolvency, bought all those assets. What are the assets? Was the claims on me, my loans. Oh, I still have to repay my loans. Yes, that's what they did. So they totally took away people's savings and forced them to still make good on all the loans. And they pushed those loans in the first place in the 1920s. That was the credit bubble that created the booming 20s. Same story, always the same. Asset bubble for asset purchases. And in agricultural loans, they were pushing the new technology. You need to get a tractor. We've got tractors now. You need to get this and that, all very expensive. The farm is the collateral. And they really pushed this out. And then they did this trick on bankrupting all the small banks, the local banks.
Buy it all.
The savings were gone, but you're not asked to repay the loan. How can you do it? Well, the farm is gone. And this is what happened in the 1930s. Farmers lost their land, their livelihood, their savings, and these families were facing starvation. There was starvation in the United States of America in the 1930s. I mean, read John Steinbeck's The Grapes of Wrath. That's a better description than an economics textbook on the 1930s, which will hide the true story. The Fed really doing this because we don't need to do this.
Yeah, no, this is fantastic. I just have to reiterate this idea of the concept of subsidiarity being more successful than alternative models of social organization or socioeconomic organization because it adheres to the reality of knowledge, right? That knowledge it's Hayek's point is that it's emerging all the time to the man on the spot. And if you act on it in that time and in that space, you get maximum value from it basically. Whereas if you try to pass it into this thing, it just doesn't work. So it's so fascinating to me that, I come back to this quote from Francis Bacon a lot. Nature to be commanded must be obeyed. So like to create a system that actually functions with a high efficiency, there had to be this maximum delegation to individuals because that's how knowledge actually works in the real world.
Yeah.
That's how it emerges. That's how it changes. That's how its relevance declines over time. All these things.
Exactly.
So it's just fascinating.
Yeah, that's a good quote. And that describes a system that works is one that recognizes human nature and how you actually need to organize. So we need to really redefine what government intervention is or should be. And it should definitely not be what it was in the Soviet Union, the Soviet style central planning, intervention, micromanagement. Now you'd think that's so discredited that, okay, that's off the table. No, sadly not. The European Union is modeled on the Soviet Union. The Soviet Union claimed to be a democracy. Why? Well, it had a parliament. But the parliament had no power to actually come up with laws. All the laws were written, predetermined by the unelected Politburo. Well, that's exactly the setup they chose for the European Union. You have a parliament, and they claim to be a democracy, but they're not, because the European Parliament has no power. The parliamentarians have no power to propose any laws. All the laws are written by the unelected European Commission. So sadly, there are people who still love the Soviet model. Most central planners love it, and the central banks are central planners. So it is actually, sadly, not off the table. But really what we do need is a different form of government intervention, which doesn't do this micromanagement, but takes the form of helping shape the institutional design, the incentive structure, so that people then can freely act and there's no intervention when they do this, and entrepreneurs do what they do, and capitalist transactions can take place without further intervention. That's what we need. And that's when government intervention is successful, when it restricts itself to this institutional design. And that includes, of course, the design of the monetary system. And there, I believe the best design is to have as many small local banks as possible. And we don't really need a central bank. And then more or less without intervention, you will get the right result, because they will mainly lend to small local firms for productive business investment.
Isn't that reducible all the way to just, again, preserving private property rights and the rule of law? Like if the government just preserved, let's say, life, liberty, property, speaking broadly, and then you didn't have the legal monopoly for the central bank, that you would actually maximize the number of small local banks and the decentralization of it all. Isn't that the case? Well,
there is a problem in capitalism, and that is the tendency for concentration. And because that is there, and it's to do with scale and the realities, the physical realities of our world, that you get a bigger return if you concentrate things, and that's why you do need a bit of institutional design to have a countermeasure. For instance, always create every year 10 new local banks, depending on how big the country is, maybe more. For the US, probably more. There should be probably 100 new small community banks created every year in the US. You see, we studied the US banking system going back quite a bit, when there was more than 10,000 banks. And then over a 20-year period, and we could confirm, because that was not confirmed in the empirical finance literature, that who's lending to small firms? It's only the small banks. The biggest banks only do deals with the biggest companies. The second biggest banks, if you divide them into different groups by size, lend to the second biggest group of companies. Because banks always, I mean, that's you can't blame them, as capitalism. They try to lend to the biggest customer group they can. And therefore, nobody wants to touch the small firms, except if you're a small bank, then that is your target group. And we found, though, that over time, the smallest banks, they grow naturally, organically, they get bigger. Some merge, they get bigger faster. And what happens? As soon as they get bigger, they already lend less to the small firms. They want to lend to the bigger firms. And that means naturally you constantly need to create new small banks. And that's what we need to do. But actually, it turns out in the US in the recent decade, the number of new bank creations has really gone down, and the regulators are clamping down on this. And the total number of banks has gone down drastically. So that's actually bad news. And that's where we do need some intervention to make sure we have this right institutional design with many small banks.
But isn't that related to the concentration dynamic you described earlier, where we get credit bubbles and then pop, and then we wipe out smaller banks and they consolidate? Well, can we assign that concentration problem to capitalism? That doesn't seem right to me.
The concentration problem is a general problem that's inherent in capitalism, or just a normal society.
Would you rather have 1 Bitcoin today or 2 Bitcoin a few years from now? Bitcoin mining is a tried and true strategy for accumulating Bitcoin. Over a 2 to 4 year time frame, successful miners have consistently accumulated more Bitcoin than they otherwise would with a traditional dollar cost average strategy. Blockware mining as a service enables you to start mining Bitcoin from your laptop. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. Plus, with Blockware's one-of-a-kind mining marketplace, you can buy and sell live Bitcoin miners with just a few keystrokes. In this marketplace, buyers get to purchase live machines at vetted facilities, enabling them to mine with zero lead time. And sellers get the opportunity to liquidate their machines and hosting contracts at will. This means you can mine Bitcoin with zero long-term commitment and high liquidity on your mining rigs. Blockware will even cover your energy bill for 1 week per mining rig when you sign up at mining.blockwaresolutions.com/breedlove. Again, that's 1 free week of Bitcoin mining at mining.blockwaresolutions.com/breedlove. And on top of this offer, you can also use code BREEDLOVE to get $100 off your first mining rig with Blockware Solutions. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risk and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. Onramp secures your Bitcoin in a segregated cold storage multi-key vault guarded by 3 independent institutional-grade custodians, none of which have unilateral control over your keys. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or be withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, Onramp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Schedule a consultation with the Onramp team to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove. Now, where would we have a clear case study of that, where we actually have just kind of a pure capitalistic model and we see this concentration occurring?
If you define capitalism as an economy without a central bank, then there aren't many cases. Yeah. So probably that's the problem, that we don't have good case studies of this. But I think it's a fundamental point that when you talk about intervention, we should forget about this micromanagement, Soviet-style intervention. That's definitely a no-go. It doesn't work. It's inefficient, creates the wrong incentives, demotivates people. But we should focus on shaping institutional structures. And they should be such that capitalism and entrepreneurs can do their job, And that's possible. But we need to think about this, and case studies would help in that, yeah. Okay, in the 30-ish minutes we have left here, there's a couple of things I still want to ask you about. So I'm just going to throw them out and let you take it whatever direction you want. One, and we started talking about the Vikings and whatnot. Yes, I want to continue that.
There was the Vikings in the Paris story that I wanted you to share. And then also really want you to talk about the inception of the Petrodollar system.
Yes.
And the particular lens you explained that through last night.
Yeah. Okay. Yeah. Okay. Well, so I mean, we sort of got slightly off a tangent, but important tangents. But I was explaining the major contributions that the Vikings had to European civilization, and this includes, of course, the exchequer in England, the Norman exchequer. And so just briefly, because it includes something else I want to mention, but before I come to that. So who were these Normans? So the Normans were Vikings. Norman just means Northmen. These were men from the north. So that's what the Vikings were called by people further south, such as in France. And when they went around and doing their raids with their Viking boats, one very attractive target was clearly the big cities, and one of the biggest was Paris. And how do you reach Paris? Well, quite easily by boat. You go up the Seine, where the Seine goes into the Atlantic, the North Sea, and Channel, and you soon reach Paris. And that's what the Vikings did. They raided Paris so often that it's now the symbol of Paris. The crest of the city is a Viking boat. Clearly, the white red sails, and then the dragon boat. So what happened then was the French king at some stage in the 9th century decided this is too much. We need to stop this. And he had a good idea. It's a bit like President Trump. He thought, let's make a deal. So he told his people, hey, when the next bunch of Viking comes, send them to me. Tell them, who's your leader? The king of France wants to see you. You're invited into the palace. I mean, it could be a trap, but the Vikings famously are really bold people. They're not afraid of anything. The king wants to see us. Okay, we'll go and see the king. So they went to see the king. The leader was called Rollo. Rollo the Viking, the Scandinavian. And so the conversation must have been, I mean, I imagine, must have been something like this. So the greetings and, the king showing off perhaps in his stately room in his palace in Paris. And the Vikings perhaps looking slightly more rugged, but probably, big swords and looking somewhat impressive in their way. And so the king probably will have turned the conversation to the lands that they passed on the way to Paris. Maybe he started out by saying, "Oh, how do you like Paris?" "Oh, very much. It's a rich city. We like to get some of that richness." Yes, we know. But what about the land as you came along on the river on your boats? Did you look around at the land? "Yes, we did." "Do you like the land?" "Oh, yes, good land." "Do you like the animals we have there?" And "Yes, big cows and pigs and all the animals." "Do you like the women?" "Yes, good-looking women." Must have been something like that. Anyway, so then the king, he at some point came to the point of his conversation. "Well, I asked you here because I'm offering you a deal. We here in Paris are very tired of the Viking raids." "Well, I guess it's not so nice for you guys, but it's good for us." "Well, can't we come to an agreement?" "Well, what could that be?" "Well, you like the land that you saw on the way here." "Yes, good land." "Well, you, Rollo, I make you the ruler of that land. Obviously, you swear fealty to me. You'll be one of my rulers. I make you count initially. Actually, later they became dukes, became a duchy. But, you want to, in these negotiations, you don't want to give away the biggest cards in the first place. But, what about I make you count, you report to me as the king, but in the local area, you're the lord, you're the master, and you people, you are the lords of the land. All that land, all the people there, you're the ruler. What happened next must have been, because, these Scandinavian Germanic societies were very democratic. "Oh, that's an interesting offer. Oh, and before you think about this, one more thing. There's one condition, just one little catch. Because this land will be around the Seine River, and where the Seine goes into the ocean, you have to close that off. Don't let any other Vikings come in. That'll be your job." "Oh, I see. Well, that makes sense. Let me talk to my men." Because they're very democratic. Rollo wouldn't have decided this on his own. And they huddled together. "Men, you heard this. Translator translated this. So what are we going to do? What are the options?" I mean, they're all men. "Well, that means we're not going back home to our women. Scandinavian women, not too bad either, right?" "Well, but here we're rulers. That's our land. You be the count. We'll be lords. We'll be the rulers." "Well, maybe we should do it. I mean, it's a pretty attractive offer." Anyway, whatever the discussions, we know the outcome, okay? They accepted the offer. Rollo was made count. His son later became duke. And the whole area, which was called something like, if I remember correctly, Astria or something, was renamed after them, Normandy, the land of the Northmen.
Wow.
They had a different name beforehand, but once they settled there and became the rulers, it became Normandy. So that's the creation of Normandy. And they had a good organization. So, the Scandinavian organizational skills were visible. They introduced this tax system. Because, of course, they're ruling the land. They want to get money out. So taxes were introduced on land ownership, which partly meant fellow Scandinavians ruling the land. And they introduced this tax administration, the Norman exchequer, using the tally stick system, which made Normandy very rich and quite wealthy, quite a successful, attractive country. There was one more catch. And who knows when this was made clear. I think this was not in the original negotiations, but it became apparent that actually sooner or later they'd have to become Christian, because part of being, one of the loyal followers of the king actually was, you had to become Christian. And they did eventually become Christian, which was a big deal for them. They then really became very Christian. They decided, well, we're going in, the whole hog, and they built churches. And because they were based on this monetary system of money creation out of wood, the tally stick tax system, they managed to fund the creation of enormous cathedrals, and monasteries were endowed by the Norman dukes, created new churches and monasteries and cathedrals. Quite impressive. Now, next, what happened was that, because you see, they had Salic law for inheritance, which means that only the oldest son inherits everything. And the other sons, well, sorry, you don't get anything. The idea was, we don't want to break up the estate.
Yeah,
it should stay large. Otherwise, they get each generation you halve
that's a biblical
fracture,
thing too.
Fracture the estate. So then the second son would usually go into the church, and many Norman church leaders became very influential, and they then were moved by the church, the Catholic Church, the Vatican, to other countries. They became very influential. So the Normans, had also influence to their. Usually the second sons then being clergy, leading clergies, bishops, many places, even in England. And the third and fourth sons, they would often join the army and be mercenaries. And they were in high demand because they're good fighters, the Viking fighters. So a whole bunch went down south. The Normans would then, being Christian, have become Christian, would always pilgrimage to Rome, and further south to various pilgrimage sites, Christian sites. And actually, they were saying, well, we should really go to Jerusalem, and this is connected to the, what then later happened with the crusade to capture Jerusalem for Christians, because it was had become non-Christian. The original Christians were, of course, in that area, but they come under pressure, and it become majority Muslim and so on. So the Normans were also involved in that. But on their journeys to pilgrimage sites in Italy, there's episodes we know from the records where certain villages were attacked by actually North African, Moorish, Muslim invaders, and Normans happened to be as pilgrims, passing by, helping out these villages, driving them away, and the villagers really impressed. And so they built up a reputation. These are great fighters, Christian fighters. So ultimately what happened, I'll cut the story short, it's quite an interesting story, but the Pope also noticed, and some of them were asked by the Pope to work for the Pope and secure land for the Pope in the south of what today is Italy. Italy didn't exist as a concept then. And at some stage, one of the more successful ones from the Hauteville family in Normandy was asked to conquer Sicily, the island of Sicily, for the Pope, because it was more occupied Muslim island. And the Pope essentially said, look, if you can do this, it's a big task. It's a fairly big island, and it's entirely Muslim occupied, and they have a strong military too, and castles and fortresses. But if you can capture that, I'll make you king of Sicily. And eventually they succeeded. It took them a couple of decades, but they succeeded. Now when that story came back to Normandy, there was the Duke of Normandy was somebody called Guillaume in French. And actually, there's an important aspect now. Because these were all men that settled in Normandy, and they left their women behind in Scandinavia, who did they marry? Well, the local women. And the language is called, the first language you learn is called mother tongue for a reason. So already one generation down, what was the mother tongue of the Normans? It was French. So maybe there's still some, it survived a little bit in the next generation, but for one generation further down, it was gone. They were all French speaking. So when Guillaume now in French, the Duke of Normandy, had this report from these Norman mercenaries doing really well in Italy, in Sicily, for the Pope, conquering Sicily. And because you see, the Pope had asked for this task to conquer the island, it was actually crusade. It was the first crusade when the Pope said, conquer Muslim Sicily back for Christianity. It used to be Christian, now it's Muslim, conquer it. I'll make you king as a reward. So this crusade, the story came back to Normandy, and Guillaume, human nature, we're always a little bit competitive, and he felt like, that guy, that's not even high-ranking aristocracy. That's pretty low country aristocracy, not really aristocracy, even if you want to put it that way. And he's now king of Sicily. Well, and I'm only duke. I've got to speak to that Pope, Let's see whether there's not an island that has a kingdom that I could conquer for him. And there was. And the Pope communicated to Duke William of Normandy, there is an island called England. I'm not happy about the rulers there, the Saxons. These were the Saxons from Germany, German-speaking. They had the kingdoms, initially several kingdoms, West Saxony, Wessex, South Saxony, Sussex, East Saxony, Essex. And, Saxon-speaking, marrying into the German Saxons that stayed behind on the continent. The princesses were exchanged, lots of exchange, well recorded. Then King Alfred the Great made Winchester his capital of Saxony, originally Wessex, and later it was united. And then England was united under the Saxons. But the Pope didn't like the fact, and he explained to Duke William, that the Saxons always chose their own bishops. And the Pope didn't like that. The Pope wants to appoint bishops.
Of course.
Now, why was that such an important one? You think, that's a that's a religious thing, not a worldly thing. It's a religious thing. Surely the Pope can appoint the bishops. Well, it was very important because of money. Always follow the money. Because the bishops, if the bishops were appointed by the Pope, the money would flow. All the money donated, inheritance, when somebody dies, no descendants, goes to the church, all the donations and the tithes would go to Rome. Whereas if it's local bishops, as the Saxons insisted on, it would stay domestic. So of course the Saxons were right. It was the better policy, decentralization, keep the money local and support your local economy. But the Pope didn't like it. So he told William, well, you conquer England for me. I will anoint you king. And so it was, the mission was, again, a crusade. The second crusade was the conquering of England.
Wow.
But you must let me appoint the bishops. Actually, later, the Pope would argue with several generations down the line with the Normans about that very point, because they started to realize we need to appoint the bishops locally. But anyway, so when William the Conqueror came over and conquered England, French-speaking William and the French-speaking Normans, they did this as a crusade, and he conquered England. Now, there's some puzzles about this. So he conquered England. Did he conquer the whole of England? Pretty much. Now, a crusade is very expensive, and then conquering an island, you need all the ships, then you need all the men. And when you're actually, trying to occupy an island, you will always be outnumbered. The locals will always be more. You can't bring that many people on so many ships. So you need good fighters. You need military equipment, weapons, and so on. You need money for that. Now, when he conquered England, he conquered the whole of England, and later, actually, the Normans conquered Scotland, Ireland. But what he didn't do is very puzzling. He didn't go for the one city that had all the riches, all the gold and the silver, the coins, the jewelry, all the wealth. London. He did not even bother. So that gives us a good idea about who funded his crusade, because the Pope wasn't going to give money for that. You had to do your own fundraising. And it turns out that maybe the city of London wasn't happy about the Saxon rule. That's my interpretation of history, because we know that the city of London then was granted independence by William the Conqueror. But he told him, look, I'm gonna watch you. I'll give you the 1 square mile for the city of London, which remains today the square mile of the City of London Corporation, which is a tiny bit inside what we today call London town, London city. It's actually very small around the Bank of England. It's the banking quarter. That remains the City of London Corporation with legal independence.
So it's a separate sovereign nation even today.
Yeah, yeah. Now, under William, it was that he made it a tax haven. They didn't have to pay taxes to him. It was not part of his territory. But he wanted to make clear, if you step out just one step, you'll be in my territory. I'm the sovereign here. So he built the Tower of London. Most people think, oh, that's in the city of London. That's what it looks like. But it's exactly just outside. It's on the border of the city of London. And it was built there not as to defend the city of London. No, quite the opposite. It was the Norman stronghold by William the Conqueror to send the message to the city of London people. Just 1 meter out here, 1 step out here is my territory. I'm watching you. It was built to watch the city of London.
Wow.
That's the end of your little square mile, guys. You know it.
Fascinating.
That's the statement of the city of London. And so what then happened is, with the Normans conquering England and being French-speaking, we have this other very important contribution that the Vikings did to world history and civilization. The creation of certainly the most influential international language, English. The English language is the youngest of the major languages in the world. It didn't exist when William the Conqueror came and conquered England, because the locals were Saxons in the Saxon areas. I mean, there were some others. You had Celtic people speaking Celtic language, Cornish, Welsh, Gaelic. That's Celtic language. That was not German. It wasn't certainly wasn't English. English didn't exist. But the Saxons were German. They spoke German, and they were the majority in the south in England. And the ruling class, however, was now Normans, French speaking. I mean, you've got the stories of Robin Hood, Robin of Locksley. He was a Saxon in the story, displaced by the Normans, because all the landowners, the Saxon landowners, they lost their land because the Normans took it. Now, a lot of them just had to give in, and they took other jobs and other positions in society. But some became outlaws, like him. Robin was fighting against the Normans, in the woods. And of course, his counterparty, his opponent, was the Sheriff of Nottingham.
Right. Because
the sheriffs were the shire reeves, gathering the taxes for the Norman exchequer, getting their receipts for the paid taxes in the form of the tally sticks. But what you had then was the ruling class speaking French, ordinary people in England speaking German. And over the following 2.5, 3 centuries, you get the fusion and the creation of a new language, which is English.
So that's the mixture of French and German gives rise to English. It's interesting. I did not know that.
Exactly.
Oh. Wow.
Yeah. And of course, I mean, that was the other important innovation that the Vikings, the Normans, gave to the world. But it's the monetary system was very successful, was in place there, that based on the exchequer for a long time, and really it was only in the 19th century that the last batch of all these tally sticks were burned. They were in the basement of the Houses of Parliament, and because they were very dry, very old wood, when they burnt them, it's just the whole building caught fire, and the House of Parliament was actually burnt down, so that the current one was built after that. So this is 1826 when it burnt down.
Wow. One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brain power toolkit is Mind Lab Pro. MindLab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take MindLab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. MindLab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. MindLab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, MindLab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. Knowing when to buy Bitcoin can feel complicated, and knowing how much to buy can be overwhelming, and getting started can be a headache, but it doesn't have to be. That's exactly why I recommend Coinbits, because it solves these major blockers and it's the easiest way to buy Bitcoin. With Coinbits' Round Ups feature, you can automatically convert your spare change into Bitcoin while you shop. For example, when you buy a coffee for $3.50, the extra 50 cents is rounded up and it goes straight into Bitcoin. Here's why that's a huge win for you, because you don't have to be a tech wizard or try to time the market just right with Bitcoin. With Coinbits Roundups, you simply set it, shop, and stack sats. And you can set this up in under 2 minutes. Just visit the website, connect your card, and boom, you're buying a little Bitcoin every time you spend money. So stop wasting your time with complicated exchanges or confusing shitcoin apps. Coinbits simplifies your Bitcoin savings strategy. So go to coinbits.app/breedlove. Again, that's coinbits.app/breedlove. That's an interesting origin story on English and other things. I guess to try and segue into the origin of the petrodollar, I mean, so English obviously becomes the lingua franca of the United States. The United States comes to dominate the world after World War II. But after the Bretton Woods Conference, we, peg the dollar to gold, and then all the other currencies, I guess, are floating against the dollar. Basically.
Well, they were fixed against the dollar.
Fixed initially, and then eventually it would break down.
Yes.
We come to the 1971 infamous Nixon shock that ends the official gold standard, although the gold standard had been, I guess, breaking down leading up to that Nixon shock. And then we have the origin of the petrodollar system shortly thereafter. So could you just walk us through that? Like what was the necessity to go from a gold to a black gold standard? How did the United States create this, through its relations with Saudi Arabia?
Exactly. Yeah. And of course, last week we had this 50th anniversary of that agreement with Saudi Arabia. So you had the Bretton Woods system, which was dollar centered, and the dollar and all the currencies, Deutsche Mark, the German currency, the Japanese yen, British pound, were fixed. The French franc were fixed to the US dollar, fixed exchange rate system. What was dollar fixed to? To gold. Yeah. And there was a fixed exchange rate of gold into dollars. The dollar price, what was it? Anywhere below $50. Was it $44 for a long time? I don't know, something.
Yeah, after Executive Order 6102, gold was at like $25, and then they repriced it to $43, I think. And that's where it stayed.
Exactly.
Yeah.
Anyway, so something like that for 1 ounce of gold into dollars. Now, who could exchange actually dollars into gold? Well, of course, it was only central banks. It wasn't ordinary people. And that meant in reality, very little dollars were changed into gold. However, this changed in the 1960s. What happened was that essentially the US, the Fed, created a lot of dollars in the 60s. Partly to fund wars. I mean, already in the 50s, you had the Korean War, and then you had the Vietnam War, and that dragged on. And a lot of dollars were created because when you have a fixed exchange rate system, it's what the French called this exorbitant privilege. It means that whoever is issuing dollars, so that's the US, can just create more dollars and the rest of the world will have to accept it. That was the system. But of course, if you overdo that, then there will be people complaining, and they will say, well, hang on, maybe we shouldn't be part of the system, right?
Yeah.
Because you're taking advantage of it. So there's a limit, clearly. But the point is, when are you reaching that limit?
And they could express that vote of no confidence by redeeming the dollars for gold. That was kind of the backstop to the system.
So exactly. So let's look at how this happened. So the US was creating more and more dollars. And of course, the Europeans noticed this. Part of the dollars that were created were used to buy European assets. In Britain, in Germany, in France, anywhere, particularly countries that were part of this, the Bretton Woods system, and most were. So then the Americans could just print dollars and buy up land in Italy, companies in Germany, whatever you want, paintings in France, castles in France, whatever. And of course, Europeans, after a while, noticed, well, hang on, this is kind of unfair. The US is taking advantage. But most countries were allies, or if you want, vassals. Germany, US occupied. I mean, it still is US occupied. It doesn't have a peace treaty. There's no constitution because it's suspended since the occupation through foreign troops. And it's still an enemy country in the UN Charter even today. So Germany had no standing to say, hang on, stop this. And of course, it was, all the US rights and NATO rights in Germany. But France was different. France was not even member of NATO. And the French leadership had always been proud to try to reestablish, having been defeated by Germany in the Second World War. So it was always had to prove something. And they, good for Europe, they were proud enough to speak up. And because they were not part of NATO, there was no mechanism to give instructions to them from America. Shut up, you be quiet, So, and they spoke up. So under Pompidou and then Charles de Gaulle, what we saw is, well, first they started to complain about it and they saw no change in US policy. So then they had to act. And what is the action? Well, you're giving us all those dollars, all those pieces of, green paper or, the book bank money, the predecessor of the digital dollar, in exchange for all the real assets we're giving you. Well, what we can do is exchange those dollars into gold. They did. So several times they went to the Federal Reserve, so the Banque de France, on instruction of the French government, redeemed dollars into gold. Initially, the Federal Reserve Bank of New York, where the gold, a big part of the gold reserves were stored, said, we're happy to do this. That's the system. Of course, you can exchange it into gold. No problem. Of course, we'll keep the gold in custody for you because it's kind of hassle and dangerous to ship this around the world. You want to keep it here in custody. That's how it started. Yeah. But soon the French decided, well, actually, it's not quite what we want. We feel the gold actually should be physically moved to France. Now, that's where it gets slightly tricky for the Federal Reserve, for the US, because...
Not your keys, not your coin.
If you actually lose the gold. I mean, it's one thing to just relabel it. Okay, France. Put the label on this gold here in the Fed, France.
But you still have the counterparty risk.
Yeah, exactly. And of course, this is the same still today with US treasuries, US treasuries held by China are not held by China. It's the same story. Where are they held? Oh, they're held by the Federal Reserve Bank of New York in custody for China. Oh, that's very nice. You know what happened in the Asian crisis in 1997? One country after another was pushed into crisis, which essentially was a Wall Street, Wall Street trick to rip off Asia. And that's another story. Perhaps next discussion we should have on the Asian crisis and some of these engineered crises. I mean, there's others which are all about ripping off people, ripping off countries. But so you had Thailand. These countries were previously growing quite fast, a lot of wealth generated, but the US had no share of that. So that had to be changed. So So the Asian crisis happened usually with the local central bank, just like in Japan, being the traitor, creating this asset bubble, and then you pull the rug, and you have your crisis. So Thailand fell, the currency collapsed. Indonesia, the currency collapsed. Korea. In Indonesia, the currency collapsed by 98%.
Oh.
Now, Taiwan was a bit of a special case because it had huge foreign exchange reserves. The second largest in the world after Japan. Number one was Japan. Number two was Taiwan. Number three was Hong Kong. And so everyone thought, okay, well, they also, all these countries had pegged exchange rate, fixed exchange rate systems fixed to the dollar, pegged systems, they call it, because they could move the peg. And that was their decision. And these pegs all collapsed, as I warned actually in the year earlier, 96 about. But Taiwan looked like a safe case, and the government came in and said, no, the currency won't move. We have these huge foreign exchange reserves. We can defend the currency. Don't worry, it's not going to move. I think it was around 28 new Taiwan dollars against the US dollar. We'll keep it at 28. Don't worry about it. And I actually happened to visit Taiwan at the time. And a few days later, it moved to 30, 31, 32. What's going on? They have all the foreign exchange reserves. And I heard from my contacts to leading figures at the central bank in Taiwan, you know what happened? There's no way that the currency should have weakened. They had enough firepower to defend for years. But it fell and fell. Why? Well, how do you defend your currency? You have your foreign exchange reserves, US dollar reserves. You think you have them. What are they? The US treasuries. Where are they? Held in custody by the Federal Reserve Bank of New York. They gave instructions to sell them and buy Taiwan dollars. But they were held up. There were technical issues. So they couldn't actually sell the bonds.
Wow.
They heard from the Fed, oh, sorry, they've got some technical issue here. And of course, when you're under pressure and every minute counts and you can't actually do the intervention you plan to do, that's the power of holding in custody.
Yeah.
So the same, of course, for gold. And so the French, they literally sent their warships in the late 60s to Manhattan. Dramatic scenes. You've got a French major battleship docking in Manhattan. And then, the military, the Navy, French Navy coming out, walking up to the Federal Reserve Bank of New York. It's pretty cool scenes, We need some more photos of that. But somehow the media was very quiet about this. And of course, their job was to literally physically get the gold, bring it onto the ship, take it back to France. And they did this. They did this several times. But then in August 1971, the US leadership decided, okay, well, that's it. We can't continue this. So Richard Nixon went on the television and made the famous announcement, we're going to, in order to defend the dollar against speculators and defend the American economy against speculators, we're going to temporarily suspend the convertibility of the dollar into gold. Temporarily, and we're still waiting.
54 years later.
Exactly. And so now, what happens next? Of course, the dollar falls and falls and falls and falls. Now, a bit of a correction would have been no problem, but if it keeps falling, that starts to be a problem for the US. And so the US leadership realized, okay, we've got to have another backup policy. There has to be a floor on the dollar. You can't allow it to just fall and fall and fall and fall, because we will lose the dominant status of the dollar in the world. And it was important for all the military expenditure, like whether it's in Vietnam or other places, printing dollars and paying for it.
And the reason the dollar is in free fall in this circumstance is because the credibility of the United States has now declined significantly. That they're not making good on redeemability for gold.
Absolutely. Yeah. It was a default. This was a default by the United States of America on its obligations. Yeah. There was a system, it was a formal system with signatures and everything, agreement, IMF and all and so on. And that was part of the deal. The US defaulted on its promise that the dollar could be exchanged into gold at this exchange rate.
Right.
No more.
And this is the problem that all gold-backed currencies eventually suffer from. Is that the custodian or the man in the middle ends up not making good on the promise at some point. and systems tend to break down, right? This is just like the goldsmiths and just like even governments intervening on certain banks and suspending redeemability for customers, right? In times of bank runs or things like this. So it's a story that just keeps on repeating.
So what was the backup plan? It was a cunning plan, that's for sure. The plan was actually 2 phases. Step 1, because America still had a lot of influence over all the other allies and vassal states, Germany, UK, Japan, and so on. And the instruction given by the Fed was, you guys go out and print money now. You debauch the yen, you debauch the British pound, you create lots of Deutsche Mark. And they did. As you see, so the Fed had a lot of influence over these. That's what they did. Now, guess what? What do we have in the 70s? When? Actually peaking in 73 for the initial bout of is inflation. Significant inflation. Now, they tell us, oh, that was an oil shock and blah, blah, blah. That's not true. It's very clear. It was the money creation by the central banks. The Fed created more money, but it also told all the other central banks to create more money. Okay, and that was the first policy to support the dollar. The others had to also print a lot of their currency. Step 2, the underlying issue, of course, was the current account deficit, the US current account deficit. Who were the surplus countries? All focus on them, just like today. Today is China. In those days, it was Germany and Japan. So the trouble was, from a US perspective, Germany and Japan didn't find enough things in America they wanted to buy. So the US side asked, what do they really need? And what these countries need. And of course, they are industrialized countries. So you import raw materials, you process them, and you export highly finished goods. So it's going to be raw materials. So what raw materials do they really need? Energy, oil. And here was the plan. They desperately need oil. If America could sell them the oil, we could balance the trade deficit and there would be no issue, right? And the dollar would be strong. So essentially, effectively, Saudi Arabia, the biggest oil producer in the world, was made part of the United States. Not formally, legally, but in reality. How? US troops arrived in Saudi Arabia and, looked around, a bit like when you open a new restaurant in Sicily in the good old days, and then the guys come around, one dressed nicely in a nice suit, and the other one perhaps looking a bit rougher. The nicer one is the one who talks to you and says, nice restaurant you're opening here, welcome, we love this new business. And the other guy starts to, smash up a table or so. This is a rough guy. I'm gonna tell him to stop this. I'm sorry, I don't know what got into him. There's some bad guys around here. Stop this. You see, we'll protect you from bad guys like that. It'll cost you a little, but, it's a protection racket. So the US was saying, oh, nice country you have here to the king of Saudi Arabia. You're doing okay. You got all this oil and be ashamed something happened to this. We're going to protect you, US troops in the country. In fact, they went a step further. They actually had this formal agreement. And they flew in 300 plus US bureaucrats, officials for all the ministries. And suddenly the Saudi Arabian government was US run. That was the agreement. That was the agreement between the Saudi Arabia and the United States of America. That essentially the US was taking over the country. But there's some benefits. You get stability. We're going to sell the oil only against the US dollar from now. And this only emerged, this was classified information for a very long time, only maybe 10 years or so ago it became published. Of course, you then earn a lot of money on your oil sales. You get a lot of dollars. Well, 80% of those you will invest in the best investment in the world.
Treasuries, baby.
US Treasuries.
Yeah, such a scam.
That was the deal. So with that, you've cleverly solved 2 problems, the current account deficit and the because the oil, so Germany, Japan now suddenly needed dollars to buy the oil.
Yes.
So that gave strength to the dollar.
Exactly. And it's almost like a soft repeg, right? You depeg from gold and you have a soft repeg to black gold.
Yeah. And secondly, you you had addressed the budget deficit, because Saudi Arabia was now the biggest buyer of US treasuries. And there's a few more stories, and I hope we can expand next time on this, because actually there was some Saudi Arabian resistance, but you can see how the deep state works. The CIA was backing this, and they cracked down on any resistance to this. So Saudi Arabia, in the end, totally caved in and became, a pliable US vassal.
Yes. No, there is more there, and hopefully we can dive into it next time with Kissinger and all that. That was very interesting. Richard, thank you so much for doing this.
It's a pleasure.
Yeah.
It's been great.
You're a brilliant guest. Lovely to have you on. Let's do one more time where people can find you on the internet. You should also mention your Substack again.
Yes. So my Substack is rwerner.substack.com. I have a YouTube channel that I want to populate much more than I have in the past, Werner Economics YouTube. And then you can look up my research under professorwerner.org, and in general, richardwerner.org. There's more general information, also some contact information.
Wonderful. We'll link to all that in the show notes. Thank you again, Richard.
Thank you very much.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money. And be sure to subscribe to this channel to stay connected.